How do I set up multiple businesses under one LLC? Stay tuned because today I'm going to talk exactly about that. How do you take multiple businesses, especially in the beginning, for you that are just starting up, you have several side hustles, you're not sure which one to do. Let's talk about when you should really set up probably more than one LLC. So specifically today, we're going to talk about three things. We're going to talk about setting up the individual LLC or C Corp and how would you do one or both of them. So we're going to talk about DBAs. For those of you who have been done for you business, if you don't know what DBA is, stay tuned. I'm going to thoroughly explain that. And by the way, if you don't know the details I'm going to share, you can't even put your money in the bank. And number three, I'm going to talk about, do you use a holding or a management company? So again, get a pen and paper. This is chocked full of education for you. So let's talk about creating that individual LLC or C Corp. So there are no limits on how many LLCs or corporations an individual can have. And I'm going to expand this because I'm launching a book on Make Your Kids Millionaires right now in generational wealth. So I'm going to say not only an individual, but a family. And if you have a family and you're watching this, you want to consider really looking at what's the overall landscape and what do you want to build together as a family if the conversation about money is in your kitchen table, which it should be. You should be talking about money in your family all the time. An LLC is normally how people get started. Now, the problem that I see 90% of the time is that the folks that are out there are staying a sole proprietor too long. So here is the problem, and no one talks about this. A sole proprietor means you're going to open the doors, you're going to operate business as you, the individual, under your social security number, which means if you own a house, if you have other real estate, if you own anything, even an expensive car, all that's up for grabs. If you have any liability, if you're in nutrition, for example, I see this a lot with personal trainers. I used to be one way back in the day. They'll just open shop and start collecting money as a personal trainer. There's no protection. They hurt somebody, that person could sue them. They can come straight through because it's just you and go get your house, your rental property, or even your vehicle or any of the stuff that they want from you. They can sue you. So the reason an LLC exists around a business is it wraps up the liability, especially in areas where you have high touch with humans. I'm just going to say that if you have high touch with humans, you need to wrap up any liability that could be incurred inside the LLC. Then the LLC does a liability protection. It does asset protection of your own personal assets. And it, number one, gives you the tax advantages. It has its own tax ID number, its own EIN number. What that means is that company now can go get its own credit. So you as the individual, right, should never, ever be a sole proprietor. If you're 18 years old, go get an LLC right now. I mean, I'd even let you pause my video, go get one and come back. That's how important it is. If you want to live corporate life and be serious about this, which we are very serious about this, we teach families when their kids are 18, they get an LLC for their birthday. That's how serious this is. It's not about the amount of money you make. And you hear that from accountants. You hear that from basic, what I call stock and block, old-fashioned financial institutes all the time. This is about your intention. Do you want to live corporate life, and do you want to live through multiple companies? Well, let's just say through the various businesses, when you first get started, you have, I'll keep on the track of a personal training business, and then you want to add some supplements to the business, right? And that might be a direct sales company, and then you might want to add another one. And then off to the side, maybe you want to do a little bit of, coaching or nutrition consulting or something in the food, category, but all that's around wellness. In the beginning, here's my rule. So get a pen and paper. Here's my rule. You can have all four of those ventures under one LLC until one of two things happens. You get to six figures, and then once you get to six figures in one of them, I'd carve it out, give it its own LLC. And then I'd carve another one out, give it its own LLC. So that's the one way to do it. You can carve them out as they hit six figures. The other way to do it is if any one of those has a higher liability. So for example, if you're going into someone's home, so say you take your personal training and then you actually do like food prep as a chef. So you take the fitness and the nutrition one into someone's home. I would take those out from any other sources of revenue. Because when liability happens, you don't want any other income to be affected by it. So usually it's income or liability which informs the next LLC to be set up. So there's my golden, I call them my $1 trillion tips that I just gave you when you get another one. So before I go to the DBAs, let me give you a horror story. And those of you who've been around our community for a while, or you've heard our stories, you've met Justin. So Justin is a gentleman who actually had a job, had an MBA, had a big career, and met an older gentleman who said, I'll match your salary, match your benefits if you come work with me, and we'll be 50-50. I'll pay you exactly what you have. And we'll be 50-50 on all the entities. So they started a flooring company. They started a real estate construction company. They actually did real estate by themselves. Notice those are three very different things. And they did some development. So all of those, right? And there's probably a little nuances to the story. If Justin's out there watching, he's going, no, that's not exactly how it was. In principle, I want you to get the problem. He didn't know a thing about corporate documents and corporate resolutions and operating agreements. So he just assumed he was 50-50. He had all the money he needed to operate. He just kept going. One day the guy died. Justin was nowhere on bank accounts, nowhere on any of the corporate documents. So the state took everything into a probate case. There was no trust. There was nothing. So Justin then found me. Worked with our community, raised a lot of capital to buy his life back. All those companies he had to buy back, put them inside his own companies, and reconstitute the whole thing. So this is really serious. And a lot of you beginning entrepreneurs, you get so excited when you have an opportunity to go work with somebody. You just jump in, but you don't know some of the rules of the road. And I know when people do not know what they're talking about when they say, oh, I don't have to do with the paperwork. My accountant and lawyer are taking care of all of it. The minute I hear that, I run. Or more importantly, I probably call you and say, you better hire us because you are in so much trouble if you're leaving your life, your livelihood, because you'll be the one sued, not them. So if this paperwork's not done, the bank accounts and all that stuff's not set up right, you got a huge problem. Now, I want to pause right now. And if you have any questions, I want you to go to the comments and put in comments. We have somebody out here every day answering comments, engaging with you. Also subscribe to my channel. If you have family members who you think, oh my gosh, my mom and dad need to hear this. My grandma and grandpa need to hear this. Share this. Like, get people to this YouTube channel so we get a common principle of financial literacy. And then hit that little subscribe button so you get notifications 5 days a week that I'm out here. Now let's go to that DBA. A lot of sole proprietors do a DBA. That means doing business as. And that is simple and it's free. You can walk down to the county clerk. You fill out a little form that takes about 10 seconds and you submit your DBA. What that allows you to do, and this is critical, because if you don't have it and someone writes your personal training business a check in the personal training business name and not to you, you can't deposit it as a sole proprietor. Even if you're an LLC, so say you have XYZ Corporation or XYZ LLC, and they write the check to your personal training business called, Loral's Amazing Fitness or whatever, and they write it to Loral's Amazing Fitness, I can't deposit in that bank account unless the DBA, right, the doing business as, is filed with the bank. No one tells you those little tiny tricks, but they are critical. And even the county clerks, I've been to county clerks where I've done a ton of DBAs because I never close an LLC. And when I reuse them in another name, I got to file a DBA so I can take the money into the bank account. That you also have to take that form to the bank. So there's your golden tip on how to make sure you get paid. Let's just go back to my example with the personal training and the direct sales company and the nutrition. If they all have different names, you're going to need 4 DBAs. Yes, they can all go to one LLC and they can go into one bank account, but you have to have the bank has to be notified that this bank account's going to have 4 DBAs and potentially 4 kinds of checks and credit cards and PayPals coming into that bank account. If the bank's not informed, they will turn back the money. No one tells you these little tiny tricks that are really, really important for your survival. So the last thing I want to talk about is a holding company, or what I would call as a management company. And I do these a little different than what you're going to read in Google. And I'm right, they're wrong. So a holding company by some people's standards means you're going to have a company up here that owns these LLCs, like a C Corp or an S Corp, and they own, like they actually have ownership in these LLCs. That is completely the wrong way to do it. That's just one big house of cards about to tumble. So let's use the 4 examples. If you have personal training, direct sales, nutrition, and you put a holding company up here and it owns them, and something happens here, you've just hinged this all by ownership. How you want to hinge it is by management contracts. So nothing should own that hinges it to the other's liability inside of a corporate structure. And if you have any negotiation about that, again, put your information in the comments. You are free to call our office and we will talk about and explain more thoroughly why that is the totally wrong way to do it. And there are law firms that actually endorse that holding company strategy of owning and hinging it all together. I think it's totally ridiculous. You actually run by management companies, not by ownership. There's a big difference. So if you're interested in more of this, we're going to give you an application at the end to have a private one-on-one conversation with one of our experts. So what I want you to do now is go to the link below. I want you to click on a link for financial personality quiz. It's going to take you to the quiz. You're going to click take a quiz. It's going to put you in one of 4 categories. And then from that, we're going to follow that up with an application, and you will have a one-on-one non-obligation conversation about what you really need and the truth about financial literacy and how to run as many companies as you want. I have dozens and dozens and dozens. You should too.